obviously.
Understand, please, that this is a couple $1 million trust, so it's not. We're not buying 50, meaning nothing. Disney's in free fall. I felt that to buy this iconic franchise here, but I bought it higher. Made a lot of sense. I think that there is a belief that everything related to entertainment is bad. This company has both outside and inside. But let's remember, the reason why this company's where it is because they spent $71 billion buying Fox. And probably about $35 billion was goodwill, probably another 15. It's not Disney Plus. It's the wrong narrative. And I say they're going to get past
because that's been dominating the narrative.
That's been dominating the narrative, and it's wrong. The narrative is that someone bought Fox and paid way too much, and that person's not with it anymore. And I think that we got to give Chapek a chance here. Let's give Chapek a chance. I'm not kidding.
Hey, Pete,
he's smart.
What do you think of Disney at 116? I mean, what'd you buy? Like right around?
Oh, I put it all over the place. I don't want to.
All over the place.
Is Peter in it?
Pete, are you in Disney?
Yes, I am. I am.
Yeah,
I'm not in it just because of and I'm not in it just because of the streaming, Scott. And I think that's what's caught up. And I think Jim would probably agree with this. It got caught up in this whole thing with Netflix, with streaming, and absolutely got hammered along with Netflix. But it's a lot bigger company than just the streaming side of it. That was something that they needed to do. They've done it. They don't have great pricing power, in my opinion. They have very inexpensive, and they need to have that work a different way where they can get a little bit more profitable there. But on top of that, they've got everything that they've got, the studios and the parks and the cruise ships, all of those different entities that they've got. And I think that they can capitalize on that. But everybody right now is focusing only on the streaming. And because of that, that's right down there with Netflix right now.
Okay, so
that is such a great analysis. I really think that Pete nailed this, and I want people to listen very closely to what he said, which is do not get caught up in Disney Plus. This is a real company doing real things, and we can't even get in the theme park because the line's too long and the place is sold out.
So Disney's a fourth worst Dow stock year to date.
Wow.
The worst, you know what the worst is? I know you know. The worst is Salesforce, which you're buying more
what
also,
am I going to do? I don't.
But you're buying more
I'll
also.
tell you, there's an issue, and I think all of us suffer from it. I mean, I've owned Salesforce. I don't know. I've been doing this Charitable Trust for 17 years. I mean, I bought my first buy of Salesforce was like at 8.
Yeah.
And then trade around a little, but I'm not in the business of running a hedge fund. And yes, Salesforce, I bought more, waited for it to come down, had sold some, hard, but we have to understand that not everybody is going to just trade. And should I have blown out of Salesforce and bought it back, Scott? Of course, but that's not the definition of what I'm trying to do.
Of course, but I really want to know more than anything else the fact that do you think that the worst is over because you're buying more now?
Well, I would
that's
say
what I'm trying to get at.
If it's a 2016 period, which was really awful, then it is over. Did Brett Taylor co-CEO spend all his time at Twitter? And Mark was in Japan last night. I was in Japan over the weekend. Mark Benioff. I think that the stock reflects. Could it be down 20 more points? Yes, I'll buy it though. This is a great company, and we can't all focus on tomorrow because I've made so much money. I gave away $570,000 last year, and that was because I didn't focus on tomorrow.
That's good advice, right? Get rich carefully.
Carefully.
That's the book. That's the book. All right, from pre-market bulletins to post-earnings rundowns, you can get exclusive insights from Jim. Follow every move that he makes for his charitable trust. Be a member of the CNBC Investing Club. It's invaluable. Go to cnbc.com/join the club to sign up or point your cell phone camera at the QR code on the screen. You'll get all of the kinds of things that Jim just talked about that he doesn't talk about on TV every day.
Exactly right.
Stay with us. Pete's latest unusual activity trades next.